Gino, let's get you right in here and let's talk sectors. Obviously, over the weekend, you build our newsletter for our pro members over at Tackle Trading.
Yeah.
Appreciate all the work that you do on that for our team Tackle out there. I know they're grateful for it as well. Matt's already kind of started into the sector conversation, but why don't you continue it and give us your thoughts on some of these broad sectors, what's going on in, cyclicals, what's going on in growth, what's going on in defensive. Where do you want to start there, Gino?
Yeah, so a lot of interesting things, but ditto what Matt said. The key words here, Tim, are sector rotation. That's what it's about. And, we break down the markets from top down on the newsletter. We start with news moving events, like our market moving events with the news past and future. We update you on that. And that's important to kind of keep up with something going on. But now on the newsletter, if you follow it week by week, you find the momentum in there in the sector rotation. And that's very important that you do that every week. It's not like, oh, this week tech's good. Oh, next week financials is good. Yeah, you're going to have your leaders and laggards in different sectors every week and every day. But it's all about where is the big money shifting. And it's really important as far as a market stance. You keep eye on the big sectors. Tech is the big name, right? Tech is like 26, 27% of the market cap. So it's exactly 27.2% of the market cap of the S&P. And that's where the money shifted into. We've been talking about that for the last few weeks now. But as you look at the newsletter versus last week we had a lot of downgrades. We definitely saw money coming out of financials, industrials, and I would just rather say the cyclical sectors, industrials, financials, materials, and energy. They were downgraded quite a bit, but you'll notice we didn't put them as bearish. Once again, everything except utilities and staples is holding their bullish trend. That's based on a long-term channel. It's definitely an uptrend long-term still. We're just starting to see some of these sectors bouncing off their lower. And in the newsletter, I talk about the 50-day moving average, which has been tested across a lot of sectors like financials. And we saw some weakness there. We saw some weakness there in those cyclical sectors, what I want to point out, which is our industrials, financials, materials, and energy. Now, that was last week. This week, we had what we call a little bit of a retracement. And a lot of the same kind of sectors, like, you can tell some, especially financials. And that's the one I want to keep my eye on, Tim, is financials right now. Financials, and I found something interesting in my research here. Financials, you see that big candle down day right before expiration? That is the day after the FOMC meeting, okay? That's the day after. Now, a lot of movement happened on the FOMC meeting on June 16th and the interest rate talks, and that happens every 6 weeks. Now, since that day, sectors have made big moves, okay? Since June 16th, all the sectors had big moves. And that's where I like to see where the money's going, is on big days like that and following through. Oh, 1 second here.
Yeah, and you mentioned the word retracement, Gino, and obviously that is officially called a bearish retracement because of the lower pivot low. And, Matt has highlighted the candle there. That big drop did kind of change the nature of the pattern and the trend, brought it below moving averages, put in a lower pivot low, and kind of moved it more into a sideways consolidation. Bear retracing back into those MAs now here, Gino. So, yeah, anyway, go ahead and continue your thoughts there, sir.
And that what you're showing there, Tim, I'm pretty sure you got the 50-day, 20. You use the same moving average as I do. That's a key area right there on a daily chart. When you look at that, that is what we call a bearish retracement on a daily. But when you look at that, can you switch over to a weekly real quickly? If you look at a weekly, not too shabby still. You know what I mean? Yes, it's a pullback. We're still in a nice support channel there. It's textbook. You can go back and found support off the 34.5 level. That's financials. It's one of the bigger, what we call cyclical sectors, okay? So that's one of the bigger ones of the market. So that's when you got to watch for the cyclicals. Now, since the 16th, check this out. The only sectors that have stayed above their June 16th price are technicals, the infotech, communication, and discretionary. And one other one, healthcare. Now think about it. Since the FOMC meeting, Which ones have hit new highs? The growth sectors. So see, there is key events that you have to keep up with. There's key analyzation you have to follow through with. Where's the big money going after they get an outlook of what the Feds are doing, right? So it's not a coincidence that none of the other 11 sectors, but the top 4, tech, communication, discretionary, health. Now, health used to be, and Tim, you and I talked about this.
Mm-hmm.
Is health, how do you classify it? It used to be considered a defensive or safety, right?
Traditionally, yeah, but it's a unique one in some ways because of the healthcare plans, obviously being more traditional conservative type
And
things that pay
biotechs.
dividends. But then biotech's a little bit more aggressive. So it's got a little bit of a mixed bag. Matt, how would you categorize healthcare as defensive or aggressive?
I don't know what conversation I love more, central bank theory or, quite frankly, sector categorization.
Mm-hmm.
For a long time, we categorized both finance. For a long time, the sectors were categorized as aggressive v defensive,
Mm-hmm.
right? And you had 5 aggressive sectors, you had 4 defensive sectors, and this is before we recategorized as before we had real estate and before we had communications. And finance and specifically healthcare were both labeled as defensive sectors because traditionally they are extremely defensive sectors. Finance, I felt, changed the dynamic of that in the early 2000s, quite frankly, when you got rid of Glass-Steagall in the late 90s and you started reducing the regulatory measures that would not allow the banks to both be lending banks and investing banks. And so all of a sudden, finance went through this amazing growth stage. And then, in the 2008 type crisis, where defensive sectors typically do a little better than aggressive sectors, what was the worst performing sector in 2008? Well, that's finance, because from 2002 to 2007, the market treated it like the number 1 growth sector, which means it got hammered. And so finance, in my opinion, stopped being a defensive sector in the 2000s, given the fact that it started trading more in line with the aggressive approach to the market. Healthcare, I feel, kind of went through the same thing following Obamacare in 2010. And then all of a sudden, the market started treating healthcare vastly different. And healthcare started being treated more like, from a price perspective, more like an aggressive sector. And so in a lot of sectors, you have a combination of some defensive, some aggressive. But I feel like we've went through this evolution. And again, the market's still going to categorize aggressive v defensive. But I personally feel like we do have 3 categorizations of sectors. You have your aggressive sectors, which you do categorize as growth. That's discretionary. That's for the most part comms, and then technology. Then you have your cyclical areas of the market that are very economically sensitive, and that would be your financial areas of the market, your industrial, energy, and I'm missing one off the top of my head. So you got basic materials.
Basic materials. Mm-hmm.
And then you have your defensive areas of the market. And the defensive areas of the market, in my opinion, are staples, utilities, and real estate. Healthcare is that weird one where it kind of beats to its own drum. It's got some cyclical nature to it, but it also has some growth nature to it. And if you actually look at the individual components, there's some value. It's really that one sector that does not fit one of those categorizations.
Exactly. Yeah, that's a good point, Matt, because we look at the 11 sectors, but like healthcare, if you break it down to biotech, there's some very volatile growth stocks.
Oh, some of the most aggressive components in the entire market are in healthcare.
Yeah, and then you get the healthcare plans, you get the hospitals, equipment, all that stuff. There's some financial backed stuff in there too. Yeah, that's what I call a hybrid of healthcare. Is like, well, I don't know if I want to be in safety, or I don't know if I want to be in growth. Well, you know what? Maybe look at healthcare because it's got a little bit of defensive and growth in it. It's like your hybrid.
It is a hybrid. I love that word because it's got some of your most aggressive components.
Well, another one I think,
and it has some of your most defensive. Yeah, go ahead.
Think about this as hybrid because real estate, it could be cyclical or defensive depending on the real estate market, right? It could be its own commodity sometimes, but
Real estate itself, I would agree with that, but the REITs in the real estate sector are pretty defensive with the dividends.
It's
Don't you
a
think?
Yeah,
dividend. It's a
defensive.
dividend.
But
Mhm.
ever since the 5G thing and these, American Tower and Crown Castle, they're buying up the property now. They're becoming they're becoming not just a REIT, they're like the high flying. You better
Sure.
jump into these. These are like almost growth stocks.
But I
when
think you
start
can
talking
find,
5G.
I think you can find little subtle ones like that are like shed the sector
Yeah.
designation within any sector, right? Think about consumer staples. Beyond Meat is a consumer staple. So there are individual components that are going to buck the trend in the sector.
Yeah, again, it definitely was a
Matt?
huge growth stock. You know what else is
Yeah.
interesting?
I just
Hold on,
want to make one quick point on real estate here. I don't think we changed the categorization of real estate simply because real estate companies are taking advantage of the volatility within the real estate space. We would criticize them if they weren't doing that. They're doing their job is what they're doing. So no, unless that dividend analysis changes in real estate, this will and should be considered a defensive area of the market.
Yeah, definitely. And what's interesting is, again, back to the sector rotation, is following the big money is what we're doing on sector rotation, is what sectors are outperforming. Where's the money going? Where's the volume going? Where's the trading going? And where's it coming out of? Finding where that's like, help us jump on the right trend. But we don't have time for it, and hardly anybody does. But if you really want to break it down and nail it, because we had a question in there like, what do you think of communications? You really still have to, once you find a sector that's definitely out, you still have to find the outperformers in there and where's the strength. But it comes down to industries. And we're not going to go into all 164 industries on the newsletter because that would just take forever to can you imagine our meeting. Hey, how do you rank biotech? It would take us forever. But you do need time to look through like biotech, transportation, different retail ETFs. But you got to find, when it gets down to the industries.